things to kind of watch for is that volatility remains very, very complacent here. And again, very, very complacent markets tend to lead to non-complacent markets. Now, what causes that? Who knows? It's just one of those things you want to pay attention to. But here's what you need to know before the bell this morning. Markets basically hit an all-time high last week. Again, trading was very, very, very muted, right? We continue to see these kind of days where markets are just, 0.5% gain, 20 basis points gain, 30 basis. We're not seeing big moves in the markets in one direction or the other, but just kind of continue to climb this climb this wall of worry. Again, we came down, we tested the 20-day moving average, held that support, we've rallied off that, getting a little bit deviated from that. So again, a bit of a pullback here. Back to the 20-day moving average wouldn't be surprising. Just need one, maybe a disappointment, and some of the language on Wednesday does the trick. We'll see. But again, this morning, futures are up. Nobody's really worried about much. Markets are a little bit overbought here on a relative strength basis. So again, we've kind of, we've had this market rally. It's pulled that relative strength back up. Again, we're kind of sitting on a very tight MACD momentum signal. So again, we're not seeing a lot of momentum in the market. It's just very muted right now. But again, it's just kind of this, not a lot of sellers coming in. So buyers are driving prices higher. A lot of people wanting to buy. Retail buying as a function of this is now approaching some of the highest levels that we've seen. So retail buyers have been an important part of this. If you take a look at the professional investors, their allocation's still a little bit underweight here, except for CTAs. They're, the trading algorithms, they're fully allocated, but most of your professional investors are, kind of underweight equities, et cetera. But again, we're about to head into the end of the quarter. So as we go into the end of the quarter, we have to have quarter end rebalancing. We could see some buying from institutions as well. So again, there's plenty of support here going for the markets. But again, we just have this very kind of trend of the markets that just kind of grinds higher here. Now, interestingly enough, there's been a lot of conversations lately about a market melt-up. This really isn't the look of a market melt-up. This is just a grind higher. Investors are willing to pay more. We're not seeing a real speculative sharp advance, which would be more of a melt-up type mode, kind of like we saw in early 2019. We had that very, very sharp advance in the markets. We're not seeing that right now, but again, it's just kind of this grind higher in the markets as just investors keep buying, but we're not seeing a lot of selling. Again, nothing wrong with all of that, but the things to kind of watch for is that volatility remains very, very complacent here. And again, very, very complacent markets tend to lead to non-complacent markets. Now, what causes that? Again, who knows? It's just one of those things you want to pay attention to, is that we do have a market that's very quiet. Momentum is very kind of ebbing and flowing. It's not real strong momentum. And you've got this very, very compressed, very complacent market. That's a good setup for something to come along out of the blue that just creates a spat of volatility and a fairly decent sell-off in the market. So again, just something to be aware of. Continue to hedge your risk, manage your portfolio exposure accordingly. But that's what you need to know before the bell this morning.